Okay, welcome to the second part of this. I'm hoping that you guys can hear me here. How do I do this? Okay, it looks like we've got some of you back, but I'm going to wait a couple more minutes just for everyone to kind of get here. My apologies. It looks like in resuming with OneNote, it had to be a new chat, so my apologies for that. We are going to get started in a couple of minutes here, but just again checking in. If you can hear me, can you just quickly make a note on the chat just so I know that you are present? If you can hear me, please make a sound or do something. Perfect. This might not sound as good because I'm now actually on my laptop as opposed to before when I was on my PC, but I'm hoping this sounds okay. You might need to full screen this just so you can see the questions themselves, but all right, let's give this a try. Again, I don't know what's going to happen when I try writing on the screen with the microphone, but I'm hoping it doesn't sound that bad. If it is noisy, could someone just quickly message in the chat, and then what I'll do is I'll plug in an external mic so it doesn't, so it's not as noisy. Okay, so let's get into some calculation questions here or some actual application questions here. The following are some of the terms discussed in the chapter. Match each term with the description below. Each term may be used more than once or may not be used at all. Okay, so the first one there is an expense account that shows the cost of merchandise sold. You see that they had to work to try to make this a bit hidden. That one's fairly straightforward. It is your cost of goods sold, and that is transaction number 3. I'm just waiting to see that this updates. Let's see here. Um, yes, okay, it is working. Great. A group of accounts that share a common characteristic, such as all inventory accounts, that's called a subsidiary ledger. We didn't actually refer to that in the lecture, but now you know. A group of common accounts that share a common characteristic is called a subsidiary ledger. You'd use that as well in accounts receivable. So for example, talking about all of your different receivable accounts, maybe you've got all of the accounts from one particular customer or a few different customers of the same type. That would be called your subledger. An account such as sales discounts that is deducted from a revenue account on the income statement is a contra revenue account. That was number 14. The return of unsatisfactory purchased merchandise is called a purchase return. And actually what I can do here is, as I'm going through this, I'll try to quickly pause, let you have a chance to quickly write something down, and then we'll keep up with this. So again, I'm going to treat this as though you guys are in front of me here. I will go a little faster than I typically would because, I mean, obviously this is recorded and I don't want this to be a really boring video, but at the same time, try to write these down as I'm going through them ahead of me. Freight terms where the seller will pay for the cost of shipping the goods. Well, if the seller is paying the cost of shipping the goods, that means ownership doesn't transfer until it reaches the destination. If ownership transfers at the destination, we must be talking about free on board or FOB destination. An inventory system where the physical inventory count is required to determine inventory on hand and establish cost of goods sold. That is a periodic inventory system. A reduction in price given to a customer for unsatisfactory inventory is referred to as a sales allowance. Sales revenue minus cost of goods sold is your gross profit. Revenues, expenses, gains, and losses that are not part of the company's main operations are non-operating activities. Freight terms where the buyer will pay the cost of shipping the goods is called free on board or FOB shipping point. Here the buyer is paying, right? This is FOB shipping point. An inventory system where the cost of goods sold is calculated and recorded with every sales transaction. That is a perpetual inventory system. An asset that shows the cost of goods purchased for resale is merchandise inventory. Profit divided by net sales. That's your profit margin. Sorry about that. And then finally, a price reduction given by a seller for early payment on a credit sale. That's called sales discounts. Okay, there's our first one. Any questions on that one? Doesn't look like any questions are coming through the chat. Are you guys able to see the screen okay? And do you guys have all the questions downloaded? Okay. Let's take a look at our next question here. Stellar Stores is a new company that started operations on March 1st, 2017. The company has decided to use a perpetual inventory system. The following purchase transactions occurred in March. The instructions that they give us: 1. Prepare Stellar Stores' journal entries to record the above transactions, and then 2. Post the transactions to the merchandise inventory account. Compare the total in this account with the total of the cash paid during March by Stellar for the purchase of inventory. Assume there were no sales of inventory in March. Okay, so the first one here says Stellar Stores purchases $9,000 of merchandise for resale from Octagon Wholesalers. Terms are 210 net 30 FOB shipping point. Again, keep an eye out on the dates here. This is on March 1st. They're buying it for $9,000. The terms are 210 net 30. Are we using perpetual or periodic here? They're using a perpetual system. So in this case here, we now know it's a perpetual system. We're going to write March 1st. We're going to debit merchandise inventory. We're going to credit accounts payable. And this is for $9,000. The correct company pays $155 for shipping charges. So notice here, they're not telling you if it's the buyer or the seller that's paying the shipping charges. All we know is here that this was shipped FOB shipping point. Does the buyer pay here or does the seller pay? Well, if it's FOB shipping point, then it's the buyer who pays. So here we're going to debit merchandise inventory. And this is for 155. And it said pays, which means the credit goes to cash. Now, just to be clear, had this said the correct company will pay, then we're going to credit accounts payable. If we were shipping the goods FOB destination, then here we would just say no entry. On an exam, just be sure you specify if there's no entry, that there's no entry. Don't just leave it to me to see a blank answer there, knowing that you purposefully left it blank. Okay, so if there is no entry, say no entry. Okay. Stellar returns $1,000 of the merchandise purchased on March 1st because it was the wrong color. Octagon gives Stellar a $1,000 credit on account. Debit AP, credit merchandise inventory. The net 30, or there's a comment about M30, it means net 30. And what that really means is that within 30 days, we've got to pay the whole amount. So here they've bought $9,000 on credit. That means that we've got to pay the balance within 30 days. We do get a discount, though, if we pay sooner than that. This will become important, by the way, when we're doing our journal entries to actually pay the bill. We'll have to look at the dates. On the 21st, Stellar Stores purchases an additional $13,000 of merchandise for resale from Octagon Wholesalers. Terms here are 210 net 30 FOB destination. Again, look at the date. This is happening on the 21st. So here we're going to debit merchandise inventory. For 13,000. And our credit is going to go to accounts payable. Now, although it doesn't say anything about the 22nd, just remember that on the 22nd, if I just scroll up over here, where's the rest of this question? Oh, it's here. I'm sorry. The correct company pays $170 for freight charges. Well, this was shipped FOB destination, which means there's no entry here. The seller pays. Stellar returns $400 of the merchandise purchased on the 21st because it was damaged. Octagon gives Stellar a $400 credit on its account. Well, we're going to debit accounts payable, credit merchandise inventory. Okay, on the 30th, Stellar pays Octagon the amount owing for the merchandise purchased on March 1st. Okay, well, how much do we owe at this point? In accounts payable, when we bought the inventory, we put $9,000. And then we returned $1,000 worth of stuff. Right, so this is for that first purchase on March the 1st. So at this point, for those two transactions, we now owe $8,000. Are we going to get the discount if we're paying for the transaction on March the 1st? We're paying for it on the 30th here, right? So are we going to get the discount? The answer is no. So in this case here, we're going to debit accounts payable. That's for $8,000. We're going to credit cash for $8,000. On the 31st, we're paying for the inventory we purchased on March 21st. In this case, we're within the 10 days, so we are going to get the discount. We're going to debit accounts payable for the amount we owe. That was the $13,000 minus the $400 we returned. By the way, on your exams, you can quickly show the calculation in brackets like that if you want. We're going to credit merchandise inventory. Again, keeping in mind, we're getting a discount here by paying early, and that discount is going to be $252. How do we get it? Well, it was the $12,600 that we still owe times 2%. We're not done yet, though. We have also got to credit cash, and we're going to credit cash for $12,348. And that's the actual amount we're going to pay the vendor. Okay. Part B of this question asked us to post all of these to the merchandise inventory account. So if we look, here's the merchandise inventory account. Initially on March the 1st, we bought $9,000 worth of stuff. On the 2nd, we paid the freight for $155. On March the 3rd, we returned $1,000 worth of stuff. On the 21st, we bought $13,000 more. On the 23rd, we paid we returned $400 worth of stuff. And then finally, on the 31st, we got a discount of $252. This means we've got $20,503 in the inventory account. If we look at the cash payments, well, on March the 2nd, we paid $155. On the 30th, we paid $8,000. And on the 31st, we paid $12,348. If you add it all up, you're at $20,503. Right? So the amount of cash we paid for the inventory matches the amount of inventory we actually bought. The second part of this question is going to now put us in the shoes of Octagon. So here, instead of being the buyer, we're going to be the seller and do the exact same thing again, but from the seller's perspective. Octagon Wholesalers uses a perpetual inventory system. Refer to the data in 5-3 regarding sales transactions with Stellar and to the additional information below for Octagon. We're asked to prepare Octagon Wholesalers journal entries to record the sales transactions with Stellar. Remember to record the freight and cash receipt transactions as appropriate. So if there's any freight transactions, we have to record those even if they're not brought up down here. Then it asks us to calculate net sales, cost of goods sold, and gross profit for these sales. Okay, so let's do it. It's telling us that the cost of the merchandise sold to Stellar was $3,960. So on March 1st, we've got to record the sale itself. We're going to debit accounts receivable for $9,000. This we get from the previous question, right? We made a sale of $9,000. Credit sales, $9,000. We're not done yet, though. We've got to update our cost of goods sold. So we'll debit our cost of goods sold, and it tells us that was $3,960. And we're going to credit merchandise inventory. Okay, I'm going to move over for just a second. On March the 2nd, we do have a transaction that we have to talk about here, and that's the fact that the inventory was shipped to the customer, but here the buyer actually paid that shipping, so we're going to say no entry. Right? This isn't from the perspective of the seller. We should just mention that there is no journal entry here. On the 3rd, Octagon's cost of the merchandise returned by Stellar was $440. As the merchandise was not damaged, it was returned to Octagon's inventory. Okay, so there's two parts to this. There's the fact that they returned some stuff to us. So here, we're going to debit sales, returns, and allowances. We're going to credit accounts receivable. Now, because we are able to sell this back to our customers, there's the second part of the journal entry where we're going to debit the merchandise inventory account. Right, to put this back into inventory, and that was for $440. And we're going to credit cost of goods sold. There aren't a lot of times we see an expense getting credited, so this is kind of an unusual transaction. But what we're saying here is we're just undoing the fact that we sold the stuff. Okay. On the 21st, it tells us that Octagon's cost of the additional merchandise sold to Stellar was $5,720. So here we're going to record the sale itself. So March 21st, we're going to record debit accounts receivable, credit sales. That was for the $13,000. Debit cost of goods sold, credit merchandise inventory, and that's going to be our cost of $5,720. Before I go on March the 22nd, we actually had to ship this inventory to the customer. Now, in this case, it was us as the seller paying to ship it to the customer. So here we're going to debit freight out and credit cash. On the 23rd, it tells us that the cost of the merchandise returned by Stellar was $176, but the goods were damaged, so we had to put it in the recycling bin. So here, we're going to debit sales, returns, and allowances, just like before. We're going to credit accounts receivable. But do you remember how before we actually put that back into inventory if it was saleable? Well, in this case, it's not. We can't sell it anymore, right? It's not saleable goods. So we actually have to show that it's gone. But the good news is, when we initially sold it, we already reduced merchandise inventory and we increased the cost of goods sold. So all that's happening here is we're just not going to undo that. Okay. On the 30th, the buyer paid us. So debit cash. That's the $9,000 minus the $1,000, like before. That was for $8,000. We're going to credit accounts receivable. And finally, on the 31st, we get paid for the amount where they took the discount. We're going to debit cash for $12,348. We're going to debit sales discounts. Remember, that's a contra asset. A contra revenue account. and that was for 252. And finally, we're going to credit accounts receivable for 12,600. And this was our 13,000 minus the 400. This was the 12,600 times 2%. Okay, this question asked us to work out net sales. Well, our sales were 9,000 plus 13,000. That's $22,000. From that, we're going to subtract our sales returns. So what did we have returned to us? Our customers returned 1,000 plus 400. Then there was a sales discount. And that was 252. So this gives us net sales of 20,348. Our cost of goods sold we had 3,960 plus the 5,720. That's $9,680. But then we put some stuff back in inventory, right? So our returns to inventory were 440. So our cost of goods sold actually now works out to $9,240. Finally, we had to work out gross profit. And to calculate gross profit, we take our net sales. We've got that already above, so we'll just copy that down. It's 20,348 less our cost of goods sold, again from above, 9,240. And that gives us gross profit of $11,108. All right, I'm just pausing to see if there's any questions that come through the app. What I will say is this chapter is fairly straightforward. What I would recommend to you guys when you're studying it is to probably make cue cards for both perpetual and periodic. Try to do your journal entries as best as you can, and then just check as you're, as you got some downtime. Just make sure that you're learning them and you're able to memorize them. On an exam, typically the kinds of things I'm going to ask you to do would be exactly like this. I'm going to give you the transactions and I'm going to say things like, okay, do the journal entries and just make sure you're able to do those. Again, nothing tricky here, but it's just practice, 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 and more practice. Okay. In the interest of making sure everyone gets a chance to go through these questions here, I'm going to stop here. Next class, we are going to look at exercise 5-5 and beyond. So we are going to work through the remaining questions in the problem set. There is a multi-step income statement there. There's a whole bunch of transactions for perpetual and periodic, but we're going to do that next class. So I will see you guys on Wednesday. If there's any questions, I'm just going to hang out here just in case. But otherwise, that's it for today. If you guys do want to do one more, just message on the chat, and I'm more than happy to do another one. But let's just see how this goes. I'm just kind of waiting to see if anyone messages here. Nope, people are dropping off. All right. All the best to you guys, and I hope this was okay. I'd be curious to get your feedback about YouTube Hangouts a little later on. All the best. Bye-bye. And there is my ceiling.